Today on Breaking Bitcoin, we talk about gold and silver continuing their climb and, of course, Bitcoin finally breaking out of resistance. The FOMO is quite real. Following liquidations and very high funding, price continues to push to the upside, and it's always a celebratory period. The good times are back. We're going to talk also about the plunge of altcoins, and we're going to kind of take a closer look at DeFi, as well as carry on from our analysis last week on what a Bitcoin rally might look like. Stay tuned for Breaking Bitcoin.
Hey guys, I am Chandra from getportal.co, and you are watching Breaking Bitcoin.
Welcome back to Breaking Bitcoin, everybody. Happy Monday to you. Hopefully you guys had a fantastic weekend, are rested, are ready for the markets, and Monday morning just hits you right in the face. You have to pay attention. Look at Bitcoin go. Hopefully you guys are doing great wherever you happen to be and wherever you happen to be tuning into today. Of course, this is your daily source for everything cryptocurrency and personal finance. I'm Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. We've got a great show for you guys today. So much I want to talk about, and it's just going to be a lot of information today. So, get your notebooks, get your pads, and get your trading view charts up. We got a lot to talk about. Before we begin, we're very proud to host the fastest online growing community of traders and investors focusing on cryptocurrency and other markets as well. To stay up to date, make sure to join our Discord community at discord.crackingcryptocurrency.com. All right, so opening rant before we get into the charts. It's just Bitcoin breaking resistance, and isn't it time? A market movement finally out of the majors after a long period of consolidation. Many individuals happy. Of course, some individuals on the wrong side of the market, and that's okay. When you position size correctly, when you position size correctly, when you take an L, you mark it down, and you move into your next possible setup. Not every setup is going to be your setup. You would just identify your setups, and the traders that over time adopt that discipline and adopt that mentality and focus on their setups and not the setups that could have been with some other system or trading signal or whatever, will be not only quite happy but also more profitable in the long run. All right, so money flooding into Bitcoin. Of course, we can see the effects on the market as the price of Bitcoin shoots up relative to the dollar being quite weak or has been quite weak for a while and slipping. And we could see that last night. If you, again, I want to kind of highlight on something that I mentioned to the premium members last week, which is if you're uncertain about the state of the equity markets at the open, right? If you're unsure about, if you want some confirmation as to the possible direction of the ES futures or the S&P 500 index, looking at the dollar is often quite helpful because the dollar is a good correlator. If there is a risk-off sentiment in the markets, then the dollar is going to strengthen. You're going to see investors flood into the dollar. And another good chart to watch is the dollar against the Swiss franc, the dollar Swissy, because many would argue that the Swiss represents a better a reserve currency or stable currency or safe haven currency is probably the correct term there. And you often, again, the Swissy is extremely strong and has been extremely strong. In this current cycle of forex valuations, it's moderately strong. It's strong, but it's moderately strong. But we're talking about underlying trends here and just the general sentiment of investors worldwide. And you could see like the dollar Swissy being quite weak. Now the dollar putting in a little bit of a rebound right now, but that's also going to happen when you reach periods of bullishness because a lot of selling is going to take place. A lot of profit taking is going to take place at those areas. Let's see here. And we can see the effects on altcoins as well. What's going on with Bitcoin? We can see it bleeding out into altcoins because altcoins got hammered over the weekend and are just getting decimated, absolutely decimated today. Now, depending on what kind of trader you are, if you are, we've been very, very, very bullish on altcoins. So one potential strategy too is to look for those snipe picks, to essentially be very bullish on altcoins and to kind of scrape the bottoms, to buy, big red candle, big red pullbacks. And that can often be a successful strategy. We don't know if they're going to rebound quickly. It depends on what you're looking for. You're looking for a 5% movement, or you are looking to buy this dip and then take it to the next high. I would be far more conservative on the second because, again, I stick to my strategy. I take the trades that are in my wheelhouse, which is my trend following strategy. And but it is certainly a strategy. I know some individuals are going to be focusing on that. But when Bitcoin marches, and we've seen this before, we've seen this in different market cycles. This is exactly what happened back in 2017. alt BTC valuations are going to break new lows if Bitcoin continues to face melt. So be very, very careful. What I mean to say is, if you're going to scrap up some altcoins right here, and you think you've got some really good value entries for their next wave, you might be right. But at the same time, make sure that you have a good area and relative to your position size, and you put the correct position sizes on with your stop loss to know when you are wrong, right? Because often individuals will buy what they think is a steal, and then buy the dip, and the dip keeps dipping, and often individuals will dollar cost average further down into that dip. That's not the way that I trade. I don't like throwing more money at a losing trade. I like throwing money at a winning trade because it is more likely to continue to win than reverse. So keep that in mind, and be a little cautious out there, guys. And remember, I guess the most important thing, because I feel this really needs to be said, right? We are trend following traders here. Price and current price is what dictates the direction of the market. The direction the market is moving is the best piece of data that there is. So many individuals try their hand at being market timers, where they're going to time the tops and bottoms of markets, and they are generally highly unsuccessful at that. Almost all investors are unable to predict the actual swings of the market. What is easier, and what is our edge certainly, and what is the easiest edge that anyone who wants to have access to financial markets, for people sitting on the sidelines and they see money being made, they see all this money being transferred, and they want to devise some strategy to extract profit from the financial markets. Anybody can do that. Anybody can do that if they focus on their trades and they keep things very simple. And what we do is we identify trends, and we identify a system to filter out losing trades that allows us to trade in the dominant direction, to have the highest probability of success, to have the greatest profit potential, because trends can often proceed far longer and with more momentum than you could possibly think. So, predicting tops and bottoms of markets, generally unsuccessful. Identifying trends and allowing them to, and putting yourself in a position to ride them, very successful. So it can often be attractive to play the role of intelligent bear in a bull market, but more often than not, you will make more money trading with the trend, letting the trend do what it does, and not trying to predict where it's going to stop. All right, so premium updates. The premium member onboarding will be done and uploaded to the Online Trading Academy this week. So I know right now, and Ben is on vacation, I know right now there are a few newer premium members where the introductory packet links them to Google Drive content, and premium basic members no longer have Google Drive access for the services that we offer. So the premium onboarding will take care of all that. The premium onboarding goes through all of the services that we offer, including our premium signal service. It breaks down how that looks, how signals are disseminated, how to interpret a signal, how to position size for a signal, and best practices to get the best results from following signals from the premium signal service. Goes into not only our historical results and how to read those and interpret them. It also goes into our live trade tracking sheets for our live signals, how to interpret that, how to understand them, how to get the best results, because it's very clean and simple when it's laid out, but there's so much data that we track and collect. And this is why I'm very proud that we produce the most comprehensive historical record. So every single month, all of our traders generate and produce and publicly disseminate their results for the month. So you guys can always go to results.krakencryptocurrency.com. We put out PDFs with all of our trades, time-stamped. And not only that, not just the trade itself and the objective data metrics of the trade, but the P&L results, like how that actually looks, how we position sized, how much money we put into it, and how that affected our portfolio at the end of the month, because that's what really matters. Individuals can post great winning trades, but still close out the month in the red. And that is not what anybody who actually wants to have a go or a profitable career of trading financial markets wants to have. You have to make money or you're not being a profitable trader. It's a pretty simple concept, but individuals want to post up epic wins. They want to post up epic trades. Epic trades do not necessarily mean you're making money in the market. Being a consistently profitable trader does, and that requires sacrifice, that requires discipline, and that requires a strategy. And that's why you have to put the work into building the strategy and not on flexing your awesome trade, right? That's why the majority of all the crap that you see on Twitter and on YouTube and everywhere is not going to be helpful for helping you is not going to be conducive to you actually being a profitable trader. Strategies, courses, systems, those will. Individuals that tell you to sit down and do the work, those will help you more than following somebody who just posted a 1,000% ROI trade. Who knows how much money he made. And then after the premium member onboarding is done and goes live this week, the team will be working on introducing a new strategy for our premium signal service. You guys are really going to like that. Premium members are going to like that. Now, later on today, we're going to be talking about DeFi, and we're going to get into the live charts. And the first thing, I'm not actually going to look at the chart. We can look at it if you want, but I wanted to follow up on compound. So last week, somebody had jokingly mentioned in the live chat that we should, let me make sure I'm talking to my audio's on. Okay, cool. I don't see anybody saying that the audio's on. Somebody had jokingly mentioned that, hey, we should all buy compound. And at the time, in that moment, I was like, yeah, cool, let's do it. But not recommending it as a trade. Then the next day I came on, I was like, listen, guys, I thought about it. And just in case anybody didn't interpret me correctly yesterday or misinterpreted me, I am not suggesting that people buy compound. Furthermore, I am actively suggesting that people do not buy compound here because I think it's going to slide more. And compound down 20% today, maybe more, since as I came online, all the charts were moving quite quickly because Bitcoin is doing its thing. So let's get into the scene. Let's go look at Bitcoin doing its thing and break down how we can make some money out of this. All right, let's go. All right. Opening ceremonies. I feel like that should be brighter. Guess that's the brightest it's going to get, guys. Hopefully you guys can see me okay. Sorry I look like I'm in a dank basement cave. I'm not. I'm in a well-lit studio, but you know, best laid plans. Mice and men, they say. All right, let's get this chat popped up a little bit more for me. And what do we got going on? We got Jose Canetta, David Rice, getting the popcorn ready. Good to see you guys. Tay Rice, Texas Blues, my good friend in the house. As always, Midwest Attempts and Crypto Jack. Travel and Ty, FOMO Sapien. Haven't seen you for a while, FOMO. Good to see you in here. Hopefully we are FOMOing in today. Terminative is up on the moon, and oh my lord, the earth looks beautiful. Scrooge McDuck, Strength and Profit, my friend. B-Flow, You Go Chill, Peckham Caprica, Profit Bear, Philly from Manchester, Rico, Maxifier, Ali. All right. Good to see you guys. Let me know how you guys are doing in the chat. Let me know if you guys had a great weekend. All right, let's actually go ahead and go look at that compound chart. Comp USD on Coinbase. Why not? What? There we go. Comp USD on Coinbase. So where were we? We were like right here last week. Yeah, so the chart might have looked a little bit like this. And it was right here. And that's a pretty attractive looking chart. I would certainly not fault anybody for wanting to purchase that. But, man. So, better time to buy now. Still not going to actively recommend. I would like to see compound come down below $100. I really would. I don't know if that's going to happen. I don't have a strong opinion on this chart. There's not a lot of historicity here to do technical analysis. So that means we're going to have to utilize fundamental analysis and our ideas of DeFi. And it depends. So when it comes to this, you're going to have to make your own decisions. Sorry, I'm not going to tell you what to do. Do you think the DeFi craze is overheated and this is the selling opportunity? Or are you wanting to hop on the bandwagon? Remember, trading with the direction of the trend is important. However, this is trending to the downside. I don't see any upside here. So when compound starts to go back up, maybe we'll buy them. All right, so let's talk about the trade of the day for the premium trading group. Oh, and what do you know? We are on the trade of the day right here. What do you know? It is Ethereum. Ethereum to the dollar. So Ethereum to the dollar was signaled by the premium signal service for our premium members on the 22nd of July. At an average entry of 246.90. So right about here, right at this candle close. So catching this nice breakout quite nicely. The trade's actually up 30% currently at this time. Now, so yeah, that's certainly the best trade. Trade is still open. No exit signal, no exit conditions. 348, I'll be looking to potentially take some more profit. However, that is not firmly established yet. That is certainly the second area that I have marked off as resistance on the chart. So as we approach that level a little bit more, and Ethereum lagging a little bit behind Bitcoin today, meaning the ETH Bitcoin pair is taking a little bit of a hit, but not a massive hit, and that's fine. Ethereum had already done its thing. It already, gone, let's say parabolic to a degree here. Put in a nice, good, consistent week of gains here, and it's okay for it to take a break and stall out. Remember, when reversals occur in the markets, they often occur very quickly and very violently, and it's very easy to spot them. When they're not, when something just stalls out and pauses, and if it moves sideways, generally it's going to continue moving in the direction that it was previously. So again, dip buying opportunities, consolidation, breakout opportunities. These are why people look at patterns like flags or pennants or symmetrical triangles. These are continuations, and continuations are likely to occur when markets are trending very strongly. So. All right. So trade of the day, Ethereum USD. Shout out to the premium members who took this trade. And it is currently, of all the trades that I have open, this is certainly my best performing trade. About 30% ROI currently right now. All right, next. Let's get into our daily analysis. And then we're going to look at NEO here in a little bit. All right, so moving into, we're not quite to August yet, but we'll go ahead and introduce a new potential strategy for you guys here. So, as I said, or excuse me, as you guys are aware, what we highlight on the show as far as indicators are potential systems that one can utilize or potential indicators that one can utilize. The PTP strategies that are used for the premium signal service are not displayed on the stream. Those are proprietary. We use those in-house. So what I want you guys to garner from the indicators that I use on the screen is not a holy grail or, oh, this is like the secret sauce, like a magical system that Justin uses. No, I'm showing you what you can do with work and with what is currently available and what is available on TradingView. And good reference, good guides for individuals enrolled in the PTP course, thinking about taking the PTP course, or having completed the PTP course and looking to build additional systems. Again, you're going to get all of that knowledge going through the course of how to find the indicators, where the indicators are, what are good indicators, how you test indicators, what qualities you want to look for, et cetera, et cetera, et cetera. So we've got some pretty good indicators on the chart today. So we'll be utilizing this demonstration for the month of August. I wanted to, we could have closed out July using the Donchian system, and we will look at it here in just a second. And that's a good system as well, but we're going to be looking at these for today. So Bitcoin USD. So premium signal service did not actually generate a BTC USD long. So it's not going to for this particular segment. Discretionarily looking at this, I wouldn't allow it to. I would override that signal because of how far price has moved away from our median level. Generally, I'm more conservative and cautious when looking at charts than other individuals. However, I will restate trend following traders. So I would certainly not be interested in any way, shape, or form in fading this movement right now. We have gotten genuine breakout of a long consolidation period, meaning there's a lot of pent up energy. So the momentum with which Bitcoin is moving is not really surprising. I know many individuals that I've talked to, particularly in the group, are long on Bitcoin, have been long on Bitcoin, either vis-a-vis their own system or through their own discretion. And that's fine. So if we're talking about trending entries for BTC, certainly not statistically the best candle to look for a daily swing long entry. However, you may be rewarded because, again, trends can often proceed far greater momentum than we would predict. So let's look at strategic entries for Bitcoin if certain things happen, right? So obviously the best possible scenario for an individual that has not gotten into a Bitcoin long right now and wants to have long exposure to Bitcoin is A, own Bitcoin and dollar cost average and invest into Bitcoin. So you get to enjoy these movements when they happen, regardless of whether you've put on an active trade position or not. But for the traders and in the realm of traders, obviously a pullback is going to be the most desirable opportunity, right? Preferably a big pullback. A big pullback would be lovely. We do have a few opportunities on the chart for pullbacks. So for that, let's go to the CME chart. So of course, we do have here on the CME chart, this is not the CME chart. This is the CME chart. We do have on the CME chart the much vaunted and much talked about gap. So, CME gaps, as you are likely aware, but if you're not, we'll explain. CME gaps occur because the CME, the Chicago Mercantile Exchange, Bitcoin futures do not trade 24/7. They only trade 5 days out of the week, just like most futures contracts, or just about everything on the CME, because they're not open on Saturdays or Sundays until the evening when the market actually opens up on Sunday evenings, futures, and very similar to Forex. So for those of you who do not trade traditional markets and so don't really have any experience trading on the CMEs or trading, let's say, interactive broker futures, like oil futures are going to be very common right now. But if you have some experience with Forex, it'll be the exact same. The markets close on Friday. Markets close on Friday and they open up on Sunday. So Sunday evenings when they open, Friday evenings when they close. Well, Friday at 5 o'clock, 5 p.m. 5 p.m. Eastern time, so New York time. All right, so here on the CME chart, I want to point out a few things. So first off, let's talk about the breakout. So we did form on the CME chart. It's very clean because we are excluding weekend data on this chart. On the CME charts, we had formed a very clean pennant. All right, not a flag, not a bull flag, not a symmetrical triangle, nothing like that. Although, I mean, you could make an argument that it's a symmetrical triangle. This is really a pennant because of its narrowness, but again, that's a little bit interpretive. But anyways, in either case, symmetrical triangle or pennant, it is a continuation pattern for a previously established trend. The previous established trend was to the upside. So we did get a break, and again, these things can go either way. We do have breakdowns, like we do have bearish breakdowns out of consolidation periods after price has been moving up. So again, charting out both possibilities of where price would go. And certainly throughout the majority throughout the majority of the last 2 weeks, and this price crept down, I was more interested in the risk to reward opportunity for price to break to the downside. That has not happened, and that's okay. I didn't put on a lot of, barely any. I didn't put on any long-term swing shorts to take advantage of that. The last scalp trade sort of that I took on Bitcoin was a short, and that trade. That trade was not a winning trade, and that's okay because it was low risk, very, very tight stop, and that's okay. But still, while I was, as a trader, as I was identifying what are the risk to reward setups that can generate the most asymmetric results, that means if I lose this trade, how can I, will I lose a smaller amount of money than if I win this trade? Will I have an asymmetric return? So you always want to identify those trades, right? And that should be the kind of the crux of your strategy, right? How can I create a trading system that tells me to take trades that generate an asymmetric profit opportunity? And the reason why a trending trade, having a strategy that enters you into trades at the initiation of a trend or a potential beginning of a trend, not at the bottom, not on a reversal, not on a potential breakout necessarily, although these can occur on breakouts, but when we feel there's enough evidence that a trend has been established and it is going to continue because we are just in the early 25% phase of the trend. The reason why that generates an asymmetric return is because there is a lot of trend potentially to capture. Now, you're not always going to get all that trend, but when you do, you're going to have a very large win. This is an asymmetric return versus your risk, which should be fixed. You should know exactly what your risk is when you go into the trade. By risk, I mean, how much could you lose? So at your stop loss, if price, worst case scenario, hits your stop loss, how much money do you stand to lose? You should know that absolute number when you go into a trade. And the nice thing is, for example, if you trade like I do, like we do, where you do take a little bit of profit off at a certain predetermined level, well, you know where that is, and you know what your minimum upside could be, right? So when calculating minimum upside, that's assuming that price goes up to your first take profit and then comes down and hits your stop loss, right? So you only get to exit whatever portion of your trade you have allocated at your first take profit, and that's all that you're going to get. So you know your minimum upside. But the nice thing is you do not know your maximum upside. You don't know your maximum upside. Let me emphasize the word maximum. Because if the trend persists and you allow your position to run, to let your winner run, you are going to generate those asymmetric returns, and that is the name of the game. That is those are the trades that we look for. Those are the setups that we look for, and that is the way I like to trade. Not passively, but patiently. Right? Allow the trend to persist. Allow the trend to develop. Allow the trend to do its thing. Allow pullbacks to happen. Allow consolidation to happen. Stay in the trade and let the trade work itself out until you are given an objective reason to exit, and a statistically good objective reason to exit. We call this an exit signal. This is something that we cover in PTP all the time. So, all right, back to this chart. So we have a breakout of consolidation, pennant, symmetrical triangle, rectangle top, whatever you like. We've done the analysis in different ways. We did have a target here from 11,235 to 12,120. We haven't hit that. That is starting to look likely, particularly given the girth and size of today's candle. Nice and big. Now, one likely scenario here is that we actually do hit the target before getting a pullback and getting an entry opportunity, which now, let's talk about people who want to FOMO into Bitcoin. You could be rewarded if you FOMO into Bitcoin right now. Just market buy, let's go, wait for a 15-minute pullback or something, a 15-minute red candle. You could be rewarded because Bitcoin has a tendency, just as all trending assets do, to continue moving in its overall direction. So even though you don't have a very good entry, in fact, I would say it's a pretty bad entry, you still might be rewarded. But I am not going to recommend anybody do that because you don't need to be on every trade to be a winner. There are many traders who are going to look at this chart and think, oh my God, I don't have a Bitcoin position. What am I going to do? You wait for the next trade. You have to have a high time. You have to have a high time frame preference to generally be successful in life on average and to be successful in trading. Because the failure rate for those with a short time preference, those who are watching lower time frames, those who are scalping very aggressively or are trading very frequently, some of them are successful, and unfortunately, that is the image of what trading is. Like day trading, 19 monitors, 15-minute, 5-minute bars. Some people can do that, but it's very rare. It's a very small percentage of individuals, and almost all day traders lose money. So it is not a good edge. It is certainly not a way to trade for most individuals, and that is what we are proponents of, right? Bitcoin, for many individuals, this is why we found a crack in cryptocurrency philosophically. Bitcoin represents freedom and a better way forward monetarily for many individuals, right? It represents freedom. It represents the ability to have unconfiscatable funds. It represents the ability for the inflation schedule of a currency to be known. It allows the ownership of a currency to be known while the owner is actually somewhat anonymous. And it just allows for us to have a better, more sound, and free system on which to base our economy, on which to base our societies. Okay, well, trading exists because there is speculation, because we do not have perfect price discovery in the markets. And many individuals want to enter the markets or try their hand at trading, and many individuals fail, and they shouldn't have to. The reason most individuals fail is because they have a low time frame preference, they do not have a high time frame preference, they don't have a strategy, and they're not disciplined. All of which you can learn. So I want to promote and teach a way for anybody to come to this channel, for anybody to come into cryptocurrency, for anybody to come into any financial market and develop a reliable strategy that allows them to earn money doing what they're doing, either in a full-time professional way, as I do myself, or as a passive way, which many of our members do. Many of our community members have full-time jobs, have families, have other obligations, and there's no reason why you can't make money trading Bitcoin and do those things. If Bitcoin is going to, let's say, democratize money more, then there should not be this idea that it cannot be democratized for everybody, or excuse me, that trading cannot be democratized for anybody. So this is what we teach. All right, so 11,235 to 12,120 here, likely first target. So the scenario for somebody looking for an entry, again, we talked about aggressively entering on a short-term pullback, but a more strategic entry would be a pullback, and a pullback to 96 to 99. That's where the gap is. That's where the CME gap is. Now, downside gaps have a higher tendency to be filled. Okay, that means if price is moving down, and gaps open up to the above, these actually have a slightly higher hit rate if we go and back test gaps in CME, but they have a good tendency to be filled. Right now, I am not saying that this is the best possible, I'm not saying that this is going to happen. I don't know whether price is going to pull back and hit 99, 96. It's fairly likely because that would be a retest of the breakout zone. So a classic retest of previous resistance turned support, what we call a BPC in our horizontal support and resistance strategy video that premium members have access to, and is a good addition. It's probably, if I had to recommend one slight subjective layer of analysis to increase one's trading, whether they're trading algorithmically or whether they're trading via discretion, is going to be a horizontal support and resistance. They work very compared to diagonal horizontal support and resistance, which I'm not yet, listen, after 10 years of trading, I'm not certain is a thing, which means I'm pretty certain that it's not a thing. It can be a thing sometimes, but generally there are other factors. And the market is, every moment in the market is inherently unique. So horizontal support and resistance, the idea, the concept of supply and demand can improve your trading and allow you to be cautious when other individuals are irrational, and allow you to be irrational when other individuals are cautious, which is kind of what you want to be most of the time. So 99.25 to 96.65 is the actual range of the gap. If we're looking for a full gap fill, it would be down to about that 96.65 level. So a good entry zone, if we get a pullback, is going to be setting limit bids between 97 and 99. A $200 entry range, and that certainly gives you the best risk to reward setup for looking for an actual second leg of Bitcoin, right? So we have made a higher high on the daily here with Bitcoin. This is a change in market structure. This is a break in market structure. This confirms bullishness, right? Via kind of the common market structure analysis or philosophy or methodology. So you would wait for, you would let this leg play its thing out. Or again, if you have a position in Bitcoin, let it run. Because we don't know if price is going to charge to 11,235, 12,000 here before it puts in a pullback, or if it's going to go higher, right? It could go higher. But eventually, there will be an opportunity for a pullback. There will be a pullback, and there will be an opportunity for reentry, right? And generally, when we've confirmed market structure like this, and when we've consolidated for so long, there is a good probability that there's quite a bit of trend left. There should be quite a bit of gas in the tank, barring some black swan event or some significant market crash, which is always possible. And again, just to briefly mention a few things that can happen here. Again, a quick retest of the breakout zone, a retest of previous resistance turned to support would be good to see and represent a good entry opportunity. If price were to come lower than 96, like into the 95, 94, 93 range, I would still be a buyer because I would still want to be long based on the change market structure. However, I would adjust down my first take profit and also most likely be more apt to exit the trade later on an exit signal. The reason why is because that would be what's called a throwback. A throwback is what happens after you have a breakout. So we've broken out. You have a breakout, and then price comes back, like just sells back down into the the consolidation area that it broke out of. This is called a throwback, and they represent buying opportunities. Of course, price can keep going lower, and you have a losing trade. Sometimes you lose, but statistically, you buy those throwbacks and you take them to the profit target, which is going to be a new high. But you adjust down your profit target because throwbacks do hurt performance, right? It just kind of, although there is enough momentum there to get you to a profitable trade, you tend to not go as high as you would have had you not gotten thrown back. So it just interrupts the momentum a little bit. I would not be bearish looking at this chart until we get a close below something like 9,300 or 9,200, which would really be coming all the way back down to the support of the consolidation that we broke out of. And I would not like that quite very much. That would really represent that this was actually a fake out, and that we would actually shoot down the other side of the consolidation pattern, which I've had marked out here for quite a while, 6,000 to 7,000. It's actually a pretty broad range here on the CME chart, but when we go to the volume profile chart, I have it a little bit better marked out. But 6,000 to 7,000 is the next high volume node below the node that we consolidated in, and the fair market value price of Bitcoin, the average price of Bitcoin is about $6,000. So good reentry or accumulation opportunity. So if we were to break down through 9,300, 9,000, the trade then would clearly be too short down to 6,000 or 7,000, because then we would be we would have not broken out, we would have not accelerated to the upside or continued on that, had no follow through thrown back into the range, and closed down at the bottom. So completely invalidating long setups, most likely stopping out most stop losses on longs, and the move would then be to short, but not right now. I'm not going to in any way, shape, or form be interested in fading this right now. All right, so that's the CME chart. So the best possible strategic entry is going to be looking for that that pullback to resistance, what was previously resistance. Expecting a retest of resistance and for resistance to turn into support, or a retest of previous supply turned into new demand for new investors, new entrants into the market, and to ride Bitcoin up to a new high, which would certainly be higher than it is right now. So we're talking 11 to 12,000. And then, for me anyways, with my strategy, people want to know, like, well, where do we go after that? And we can sit here and identify potential profit target areas. We'll use Quadriga ATR for that, for example. But when we're talking about breaking out of a trend and for Bitcoin's trend to continue, you will be less apt to identify good targets, because we don't have a whole lot. We're getting up to a range where there's not a whole lot of areas above us, right? We've got, let's say 13,500 would be a good area. That was an area where we previously rejected. We have 16,800, which was the swing failure pattern high on Bitcoin when we actually broke down from the highs of December 2017. So we formed that swing high in January, and that was the first lower high of the 2018 bear market. Right. So liquidity there potentially, and then of course 20,000, right? 20,000. So we've got some pretty high profit targets if we're actually going to continue on this trend and do what Bitcoin wants to do. And this is a narrative that I started talking about last week when talking about what would a Bitcoin rally look like. Well, a Bitcoin rally would look like breaking out of this consolidation range to the upside and melting faces as we approach 12,000, 15,000, 18,000, and 20,000. This is exactly what Alex put out in his analysis last night. So most, if not so most, I can't say all, but most trending strategies should have signaled a long on Bitcoin earlier or around now. I don't think right now represents the best entry opportunity after a very large green candle. However, we have good volume and good confirmation of a breakout. So while waiting for a pullback is more strategic, individuals may be rewarded by being aggressive at this level. But I'm not going to recommend anybody do that, because I'm only going to recommend what is strategic, because you can also make money on Bitcoin by not necessarily entering into a position that can make you money. In the long run, if you do more strategic setups, you will make more money rather than FOMOing into something that's moved up quite a bit already. So that's about it. Let's look at the roadmap chart of Bitcoin, and we'll talk about a few things here. All right, so the breakout of this little descending channel was actually a pretty good trigger right here. We came up and tested diagonal resistance, and the only diagonal resistance line that I have on my chart, because that one stretches down from 2017. And on the daily, I want to make this very, very clear. On the daily, we have broken that diagonal level of resistance. All right, so we had two of them, one measured from the daily close and one measured from the daily high. We stretched those, we connected those all the way down. These are the only diagonal lines that I've had on my chart. This kind of represented the bears the light, the horizontal band in which a short would have been the reversal short would have been a amazing risk reward opportunity in theory, and it was, and it was. But that trade did not play out, because we are likely going to close above that on the daily, and this is really a strong, for those who are trade breakouts, this is really a strong breakout signal, right? So again, there is nothing in life that's certain. Certainly, price can fail here, in what would be remembered as a liquidity grab or raid or stop loss hunt, blah blah blah. And the normal factors are there that would make you cautious, like very high funding and overbought conditions. But this is Bitcoin, and you have to, your best chance is to assume that price is going to continue in its trend when you see a lot of volume, when you see a lot of excitement, and to not be so conservative and to not be so cynical and pessimistic that you don't find some opportunity to enter, that you don't find a reason to get in, that you cannot conceive of the idea that price will go higher, that it can't be a breakout. Look at all these trapped, buy it. No. Trade in the direction of the trend. It's okay. Price moves big sometimes. You can always get the best entry. So we broke out of the rectangle top on today's candle, not yesterday's candle, but on today's daily candle. That'll confirm the breakout of the rectangle top, and big breakout movement too, because we are almost to that take profit that we measured on the Bitfinex chart of 11,327. Completed this this potential setup that I had talked about, and again, closing above every single level of resistance now. So breaking out of the rectangle top, breaking out of the ascending, breaking out of the rectangle top, breaking out of the ascending channel, breaking out of the and breaking above, excuse me, the long-term resistance line. Also breaking, this is also a high volume node that we were accumulating in. And if you guys will refer to my long-term analysis, this chart is up on Bitcoin, right? Or excuse me, up on TradingView right now. You can search for it. As I said, we were in a high volume node. Excuse me. So let me just find what I literally said here. Yeah, previous uptrend into a high volume node, reaccumulation uptrend proceeds, and that is what we do seem to be seeing right now, is consolidation in a high volume node following an uptrend and continuation of that uptrend right now. So it's a good time to be a Bitcoiner. All right. Let's look at Ethereum USD here, and then we'll get into our first request of the day, which I have on the chart. All right, so Ethereum USD lagging behind, as I said, lagging behind Bitcoin a little bit here, but that's okay. Still quite a strong chart. No exit signal. I would not be excited to fade this. I would not be excited to short this. Doesn't matter if price moves down 5-10%. It's still not the direction that you want to be trading. You want to be waiting for that pullback and then getting long and not getting yourself tangled or tied into a short, particularly if you're not good at fading in the first place, which most people are not. Upside targets here, 348.88 is where we're going to be about $348 to $349 is where we're going to be approaching our next level of resistance. So profit taking at this area, and kind of the area where you would kind of want to be de-risking a little bit and making sure that your trade is in a no loss situation, either by setting on a trailing stop loss or by taking some profit and then waiting for that pullback for a re-entry here. We have to look at where we broke out of. So about 264 represents the previous consolidation area and order block, and also the previous breakout zone. So that would be the pullback area that I would like to see in Ethereum if one wanted a more strategic entry until price cools off, consolidates a little bit, and gives another momentum entry signal. So this is, again, one that we're actively trading in, and my active trade at this time is my long on Ethereum. All right, so we're going to take a cryptocurrency request right now, and I did see it in the chat as I first came in, and this is going to be LTC, Litecoin. So we're going to look at the Litecoin Bitcoin chart and then the Litecoin USDT chart, but first I'm going to take a brief look at the chat because we've got some talking. All right, let's see here. Bjorn Haas says, we're on the highway. Put more into Bitcoin. Lizard King says, I am a good person. I try to be. Scrooge says, Ichimoku illustrates your words brilliantly. Thank you, man. $96.8 million 1 hour liquidations. Oh my. Sanjay, good to have you here from India, my friend. Let's see here. Then says, sideways movement will more than likely move price up, but what would be a sign of a possible big drop look like with all this current upside? So I think the question is, what would be the telltales, like what would be 6 signs of like a big reversal coming in rather than this is going to continue to the upside? I mean, you know, all the things that can occur that don't necessarily mean a reversal is going to happen. And so, well, I'll just say what those things are. So things that you can watch, things that I watch, are liquidations, lots and lots of liquidations, generally, because then they've tapped all that liquidity and they can take price down the other direction. So when we're talking about Bitcoin, very, very high funding, which we have right now, a lot of liquidations, which we have right now, overbought conditions on a momentum oscillator, for example, like RSI, which we have right now. And then, probably the best way is to go out and find your preferred, let's say, threshold indicator, right? So I say RSI, but RSI is actually relatively not super good at reliably getting you into those trades. But there are many, many good overbought, oversold indicators out there. Again, we have one here, IFT RSI, which is the inverse Fisher transform on the RSI, which actually makes it pretty effective because it takes out the chop. So yeah, sideways movement would be good to see out of any asset that's trending for more continuation in the direction that it was previously trending. And when you see just kind of exuberant, let's talk about uptrends. If you see exuberant buying, so big volume spike, big liquidations, big funding, all of those things are generally indications that price can move to the downside. But I want to caution you guys about one thing. We've seen though, we saw that a lot in a range, and you will see that in a range. So let's go back to Bitcoin here for just a second. All right. So let's talk about Bitcoin here. All right. So we were just trading in a range, and where did we see big volume, big funding, and big liquidations? Well, here at this top, and here on this candle, and here, and here. And all of those were reversal opportunities, right? Those movements all got faded. They all moved the other direction, and they were good. Kind of a good range-bound strategy is going to be reversal. It's going to be trading the range, like getting short when you get to the top of the range and getting long when you get to the bottom of the range. And that's a good strategy until you have a breakout, and then you need to flip direction and be a trend-following trader very quickly. But those conditions, and I posted this on Twitter, right? I said, look at the funding right now, right? The funding is extremely high on Bitcoin. And that's only going to happen in two scenarios, right? I actually posted this on yesterday's daily close, right? So I put the word out, guys. This volume, these liquidations, and this funding either means, hey, this is another range-bound top that we need to fade, or it is the breakout, and it seems pretty conclusive now that this is the breakout, and people are going to smash their heads against a wall and want to intelligently be an intelligent bear in a bull market and fade this. And listen, I won't chide them if they are correct, but they just don't have a good statistical likelihood of being correct, right? Being a bull and being a buyer is statistically more likely to make you money right now. And Robert asked, could I please briefly define fading a trade? Yeah, so fading a trade means, and Alex described it very well here, fading a trade means shorting a breakout, right? So when you see a big candle closing or trading above resistance, and the thought here is, oh, let's take this long. No, the fading, and Tom DeMark is probably one of the best faders, and this is how I used to trade. So when I started trading equities, I traded with Tom DeMark's indicators. And his main strategy is fading breakouts. And this can be a profitable strategy, but I find it a little bit less so in crypto, or less so if you cannot shift direction and become a trend following trader, right? Because as I said, range bound strategies work very well in a range until you're not in a range, and then you're going to get punched in the face once. So if you need to have a few asymmetric wins in that range. Or again, you position size correctly so that your one loss will not drain you of your wins, right? Because you will have one loss, and that is when you put on that fade and you faded an actual breakout, which means your stop loss is going to hit relatively quickly. Peckham says, I have not sold my compound yet. I do not sell at a loss. I just buy more. 2022, baby. So good question. Thank you, man. All right, let's go over here to Litecoin from Texas Blues. All right, so a few things about Litecoin that are interesting. Now, we're going to look at the LTC BTC pair, and then we'll look at Litecoin to the dollar. Oh, Payday, thank you so much for the 5 CAD, my brother. He says, first live viewing in months, even better than reheated. Man, it's good to see you, man. It was good to see you in the staff voice this morning. Yes, I do find, and maybe you guys can tell me, because the you know, fresh out of the oven Justin is probably better than microwaved leftover Justin, but it's probably still better than the rest of the stuff that's here on YouTube. All right, so let's look at Litecoin. A few ways I want to look at Litecoin, because Litecoin is actually a coin that I track. So let's hop over here and look at Litecoin, Bitcoin on the daily. All right, so a few things that are interesting here with LTC BTC. All right, so LTC BTC is in an accumulation zone. All right, so when we look at this chart, we can see just something that is plainly obvious, right? And that is that the number right now, the number on the right hand side of the screen, is very low relative to the number that it has been. And you know, I have previously this year, I did buy support on LTC BTC at about 0.0059 to 0.006, and you know, attempted to view that as my accumulation buy. That was previous support that had stretched back to 2017. That support did break down, and I did exit that trade at a loss. However, when we're looking, because that was a trade, that was a swing trade. However, when we're looking at a positional trade, so something that we look to hold for months or years, then LTC BTC is certainly in an accumulation zone. We've got downside because we do have established lows and liquidity much lower than we currently are. So let's just do a little bit of math here and say that potentially we have another 40 to 70% downside in LTC BTC, which you certainly don't want to dollar cost down into, because losses hurt a lot more. If you buy something and it goes down 40%, you need to move up a lot more than 40% to get your money back, to even break even. So keep that in mind. So that's why when DCAing, smaller positions that get bigger as you move down are going to be helpful. But you want to have a rational plan for your dollar cost averaging. So because that doubling down as you move down can quickly get out of control if you've got a lot ways down to go. So from my perspective, I like Litecoin. I think it's a good project, and it is something that I would be quite interested in holding for the long term, right? Now, that puts Litecoin in an accumulation zone. So on the whole, fundamentally, I like it. I like the area that it's at. It makes sense as a good long-term buy. So this is certainly a respectable addition to somebody's Money Monday procedure. Money Monday, every Monday, I buy an investment and I hold it. And when I mean investment, I mean something that I never intend to sell, right? So generally I do this. However, Money Mondays can also be utilized for dollar cost averaging into positional trades in this scenario. And this is exactly the strategy that I broke down in the community mentoring session 2 weeks ago with the premium members. And all of that, by the way, that material is on the drive. So if you guys missed that mentoring session, you can review it at your leisure. But this strategy takes patience, and it also requires being very discriminatory, in my opinion, about what you choose to enter into, because this is a trade that you might have to hold for quite a long time. Entries around here on Litecoin, I will not be disrespectful of. I think that DCAing into Litecoin at or around this area is probably a good idea strategically. All right, so that's the long-term view. However, I want to add a caveat in there. And that is that if you are not looking to pick up something positionally and hold it for years, if you are looking to trade the trend, and this is going to go into what we're going to look at here in a second with the daily chart, then Litecoin begins to look like a laggard. And one of the biggest mistakes that people can make if they're looking to trade, if they're looking to swing trade, not positionally trade, right? Positionally trade, you hold something for years or months. Swing trade is you generally hold something for weeks, maybe a month, but generally weeks, right? Sometimes days. And especially if you're a trend following trader, is that a common mistake that newer traders will make is they will look at a chart and they will say, well, let's say most of the assets in a sector are going up. So let's say most cryptos are going up. So they'll try to find cryptos that haven't gone up yet, like laggards, like slow movers, the kind of concept like, oh, these will catch up at some point. Okay. And that's a bad mistake to make. Because if they're not going up and everything else is going up, then that means they're weak, right? That means that nobody really has interest in them. And while it is possible that the velocity of money will catch up to them, it's unlikely. So if Litecoin is not moving right now and you're looking for swing trade, then it's unlikely that then whatever catalyst needs to be there for Litecoin to be moving up is not there yet. And so you are best advised, if you want to swing trade, if you're looking for something on the days to week scale, to wait until such catalyst in there, and you'll know because price is moving up, and you'll get a trending signal to go long. So as far as positional trades, I think it makes sense if you have the patience, the discretion, and you've done your research on Litecoin and you believe in it like I do. However, if you're looking for a swing trade, not really there in my opinion. Just from a chart perspective, just from looking at the chart. Now, let's go look at the opportunities that might arise with an indicator strategy. Okay. All right, so looking here, we don't really have a good opportunity. And this is mostly because of on-balance volume here being fairly negative, looking just at this system in general. Now, we did get, obviously, this quite a bullish candle here. We do have a bullish trend, and we've pulled all the way back down to the baseline that I'm utilizing here. But also simultaneously generating an exit signal on the same candle. So not here for me on the Litecoin Bitcoin on the daily. I'm not going to deny that there was an opportunity, and that is going to be, just buying support, buying that, having that limit bid at support, or buying that reversal baseline bounce type situation. I mean, this support right here has been here for quite a while, and we have price thrown back there on high momentum, and that makes sense. That makes sense to see this kind of immediate bounce back that we've had. Because whenever you approach support or resistance on high momentum, you tend to bounce back away from it, kind of like you threw a super ball at the wall. All right, so, but since that trade is already, so that trade's already happened though, so I don't think setting buy orders down there again is going to be a good idea. I mean, unless you think the same thing's going to happen. So, positional trading looks good. Daily swing trading, not the setup that I would look for. I would like to see price consolidate here and then begin to move a little bit higher. That would suggest that there is actually some bullishness behind the Litecoin chart. All right. Funding, can it hold the market back? If so, how? Well, not in and of itself. Funding is a mechanism that is designed to prevent price on derivatives from getting too out of sync with the underlying index price, right? So the actual spot price of Bitcoin or the underlying asset. So, funding in and of itself does penalize traders for holding long positions open. So if the majority of the market is long, then funding will be positive because it wants to disincentivize individuals from holding their longs open too much or aggressively market buying, because that if left to its own devices could make price trade at an extremely high premium, right? So and when premium is quite high, often price reverses. So, and because there's arbitrage opportunities there. And when price is in extreme backwardation, again, price tends to reverse to the upside. However, premiums do generally represent, so when price is in contango or in premium, that represents a good strategy where you short the futures contract and long the underlying, and you have locked in that premium, right? You can't lose money on that trade. Well, I mean, you can if you use leverage and your stop gets hit, or if you get liquidated and price continues. But if you use, for example, the way that you would safely do that is use 1 to 2x leverage to short the contract that is in contango, that is in premium, and then you long the underlying assets. So you would hold Bitcoin spot long and short the futures contract, and when the contract expires, so if you're using expiry contracts on BitMEX, for example, you would have locked in that premium. So that is a very common strategy, and this is why contango on markets is more rare than premium, or backwardation, when price is in when derivatives price is lower than the spot price. So Litecoin breaking out too? I don't think so. KS Smooth says, sorry if I've already covered this, but my thoughts on why the steep inverse correlation between Bitcoin and alts, institutional dump of alts to pump BTC. Well, I don't think it's necessarily odd. I mean, we see this all the time, right? And I've talked about this a lot. That I said this at the very beginning of this little mini alt rally, when hey, be bullish on altcoins, like trade in the direction of the trend, get you some alts, and we did. We've traded nothing but altcoins for like the last 3 weeks, but all of that money that flowed into altcoins is going to flow back into Bitcoin. And that's my position as more of a maximalist, as somebody who truly believes in Bitcoin, but also because the real market value for Bitcoin is there right now. And unfortunately, a lot of these cryptocurrencies don't have projects, don't have working blockchains, and just are not effectively providing value to the market. They're assets for speculation. Their main job, altcoin's main job, is altcoin's main job has been and always has been generating more Bitcoin, right? Giving people a lot of opportunity to speculate on the value of an altcoin and to make money, either in the form of more BTC or now in the case of more dollars, if you convert the BTC into USD or USDT into USD or however you'd like to do it. Now, that is a broad brush that I'm painting with, and I know I just pissed off a lot of people, but it's the truth. I mean, you're not seeing, I don't see a lot of crypto companies actually solving real world problems and developing strong user bases. Now, I'm hopeful that will come. Again, there's lots of projects that I have quite a bit of faith in, and there are certainly ones out there that are doing some of that, right? Okay. But we're just not there yet, right? The majority of this is speculation, so that's okay. So I think that it makes quite a lot of sense. I think that we had really, really strong alt rallies. Price was up quite a bit. DeFi craze got everybody to FOMO in, and that opportunity was taken, right? When people FOMO in at the top, and large whales, large investors, previous bag holders are going to dump their bags on the new buyers because you want to sell high, and that's what happened. And then you get the accelerating effect of Bitcoin breaking out. And people want to be back into Bitcoin, so they dump their altcoins and they move back into Bitcoin. It's just a market-wide, positive feedback loop. All right, so thank you so much for the request, Mr. Texas Blues, my friend. One other thing that I'll note there though is so trading Litecoin against Bitcoin doesn't make sense. It doesn't make sense to me right now. If Bitcoin is going to increase in dollar valuation, that which I think it's likely to do, that you exchange your Bitcoin for altcoins, right? Like that's we may be past that, right? Now we'll see over the next week or so, like whether we actually get some bottom bounces. And as I said, what Alex and I are going to be posting some charts on is potential pullback opportunities on altcoins. That they will likely have, if not another leg, then kind of a last gasp. All right, a last gasp, right? Where there's profit opportunity there. Now that's not PTP wheelhouse, that's not primary strategy, but there are opportunities there that we'll identify and recommend for individuals. However, the value of coins against the dollar, of altcoins against the dollar, will likely go up as Bitcoin goes up, but their SAT value will drop, which means you're better off holding Bitcoin in general against the dollar, right? Because that means that Bitcoin is appreciating more rapidly than those altcoins. So, for example, you can exchange your Litecoin here for Bitcoin, and you can make dollars, you can make profit, but you can, but you'll lose BTC, right? So it would have been better for you to hold the BTC in the first place rather than exchange it. All right, with that being said, guys, we're going to move on to the kind of finality of our market wrap up here, where we'll look at Forex, we'll look at precious metals, and we'll look at indices. Before we do that, I want to remind you guys that today's show is brought to you by the Kraken Cryptocurrency Premium Trading Group. And there's never been a better time if you guys enjoy the charts, if you guys enjoy the strategy, and this is something that you would like to have in your own life. You guys would like to build your own strategy and you like to trade with a community of traders who do not focus on discretion, who do not focus on subjective analysis, who focus on trading signals and building systems and indicator-based information. It's never been a better time. We're about to have a nice market cycle on BTC right here. Just as back in 2018, individuals are going to be left out in the cold. I want as many people as possible having put in the work, having done the work to build systems so that when the time is here for profitable opportunities to appear in the market, they're able to take advantage of those. This has been one of the best joys of my life right now, is seeing so many students who have worked so hard on, put a lot of man hour into building trading systems, and now they're sending me messages and they're posting their charts, and I see their trades because we do our mentoring, or they've shared their trading journal with me. That they're doing what they wanted to. They are locking in their profits. They are identifying the trades. They're not focused on the 15-minute chart. They are catching the larger trends, and they're prepared for situations like this, and they're able to take advantage of them. And instead of running around freaking out looking for an entry, they're just very, very happy with the entry that they have because it was their trade setup. So there's never been a better time to join our community of objective traders, learn to build your own objective, data-driven strategy. So if you're tired of trading with your gut, we're seeing poor discipline and trade management sap away your progress, you make the change and join us at premium.crackingcryptocurrency.com. Links down there in the description. Tell them that the YouTube show sent you there so they know I'm doing my job. All right, let's look at Forex, because the trades that I have on Forex have been good. Nice, consistent trends coming, or have been in Forex for the last several weeks, and that market has been good. And it was kind of like, it's the perfect market for me anyways, to trade in conjunction with cryptocurrency, because generally the opportunities are there, or trending opportunities are there, particularly when regular markets calm down. Volatility and liquidity, well, not really liquidity, because the Forex market's the most liquid market in the world, but volatility bounces from asset class to asset class, right? Just depending on what opportunities are there and what is exhausted. So the first thing that I want to look at is, we're just going to kind of look at my open trades here real quick, trades that have been put out as signals to the premium members in the premium signal service. So Euro Yen. Here we go. All right, so Euro Yen. Euro Yen here is a good trade. We entered the Euro Yen on the 14th of July. So enter the Euro Yen here on the 14th of July, and this has just been a beautiful trend to ride to the upside. The Euro Yen's done very good things for me right here. It's done good things for all of us. Took initial profit, so this trade is in a no-loss situation, and a nice almost 1.5% movement is good to see out of Forex. That is a terrific movement. Got quite a few pips here, but we can measure pips if we want to. Let's see here. Yeah, about 160 pips on the Euro Yen. So good trade so far. And we'll just allow this to continue to run. No exit signal, nothing's been generated right now. And we can see from the currency strength indicator down there that the Euro and the Aussie are the strongest currencies right now as they're trading against other assets, followed by the pound and the Swiss franc, and of course the yen, the Canadian dollar, and the United States dollar, weak. Very, very weak. So again, if you're looking for what to trade against what, that currency strength indicator can help you out, give you a good basis of what's strong and weak out there. And it's also probably the best way. It's the method that I utilize to determine. All right, I know I want to let's say you get you're getting long signals on the Euro Aussie, the Euro Yen, and the Euro Pound, right? Well, which one do you take? Do you take all three? Probably not. You should not have. I mean, you can, and then break your risk down, but then you're going to have kind of two underperformers and one bigger performer when you would have been better off just having your money in the better performer. So how can we identify that better performer? Well, identify what currency pair, what quote pair is the weakest, and trade against the weakest. All right, so we've got okay. So just update here on the Euro Yen, doing well, no exit signal. Keep you guys updated. Let's see here. Aussie Kiwi. Let's see here. After hitting our I think the Aussie Kiwi's actually back at entry right now. Yeah, so we entered the Aussie Kiwi right around here. Had this nice, just no, sorry, excuse me. we did enter the Aussie Kiwi. I remember this last week on the 20th because I remember talking to Alex about this. So entered the Aussie Kiwi long on the 20th. We actually got the signal. Volume actually confirmed on that candle. And then just a big boost to the upside. Now, we didn't continue on. The Aussie Kiwi has pulled back. We're right back at that breakout zone, still in profit on the trade. Not as much as we would have been had we pulled out of the trade completely up here. But again, no exit signal, waiting for continuation to the upside unless that signal is actually generated later today. So again, I don't have the system up here for Forex trades, at least the indicators that we utilize. And so I'll review those at daily close this afternoon. But either way. Euro Swissy. Okay, also along, and this is starting to look like that Aussie Kiwi trade, right? Where we entered the Euro Swissy on the 20th as well. So we entered on to the 20th and again had a kind of a nice appreciation. Price pulled back down to the entry zone, and then we get this just big old ballooning, beautiful candle on today's daily chart. So we've hit TP1 now on the Euro Swissy. This is now a no loss trade, and we'll just allow this winner to run. And the pound yen, also long on the pound yen, entered this one on the 21st. Let's see here. On the 21st, let's see, did we hit? This one might be the one that I'm going to show you where we have not made money. Yeah, so actually we have not hit we did not hit the profit target. The pound yen is actually trading against us and below our entry. So we'll review later this evening to see if we've gotten an exit signal or if we've crossed below our fail-safe line. And the dollar Canadian. So short on the dollar Canadian since the 22nd. Yes, since the 22nd, just taking the continuation signal to the downside as we were breaking out of this consolidation pattern after a pronounced downtrend, and we continue to descend. So again, could have done it the other way, I suppose, because the dollar is actually a little bit weaker. But you know, nerding out together. So the USD CAD, good trade for us so far. And again, already hit TP1 on this wick to the downside right here, and just continuing to move for us. So quite happy with the dollar Canadian. So again, all Forex trades are looking quite good. That's a broad look at the market. I did see a request up here for the Aussie dollar. So let's look at the Aussie dollar real quick. And let's just throw on you. Yeah, so okay, Aussie dollar is not anything that I would be short on. I guess I understand the fade and playing the double top here. But again, I don't reversal trade Forex. I don't reversal trade cryptocurrency generally as my primary strategy. Everything here looks actually quite positive. Let's see. With this system right here, long on this candle right here, and exit here, and nothing until here. And actually would be long. I would be long on the Aussie dollar right now. I'm not. Actually, no, sorry. You actually would have gotten a signal here. What right now is the top. But the Aussie dollar did signal again right here, and you would add a little bit of drawdown, but you'd be back up in entry. I actually like the Aussie dollar to continue. I wouldn't be short this. Let's see here. All right, precious metals. Let's go look at our CFDs. Let's go look at gold. Continuing its beautiful rally to the upside. Just, you know, what can we say about gold, right? I mean, we're to the point where, you know, we have to look at, you know, weekly levels. Oh, and we're blue sky breakout on gold, right? I don't know what to tell you guys. Very hard to predict. And this is the beauty of trend following trading. At this point, we have to, there's nothing to do with gold. You hold it. You just hold the trending asset. You do nothing. If you guys want to learn to make money in the markets and you see opportunities like what gold is doing right now, what Bitcoin is doing right now, what Ethereum is likely to do, what silver, you take your hands, you place them on your chair, and then you sit back down. That is how you will make more money. You will not going to make more money looking at the chart every 5 minutes, waiting for a reversal, you know, like looking at all these levels and lines and analysis from other people. No, just let a trend go. Just sit down. Stop trying to, you know, get the best entry, or stop trying to get the best exit. Stop trying to time the market. You know, get a good reversal, get a good exit indicator up there. It's going to give you a reliable idea of when to exit the trade, and then just wait, right? And if you get out of the trade, wait for continuation opportunity, re-entry opportunity. But gold, hold your gold. I don't know what words to utilize more vehemently. And if there are pullbacks and they have not disqualified your entry strategy, I would long those with extreme prejudice. Silver, exact same thing. Hold your silver. Silver now above $24. That means that anybody that bought, anybody that's been accumulating silver is going to be extremely happy. And we do not know how pronounced or how powerful these trends are going to continue. That's not even a good thing to think about, I think, because you're gonna waste so much time and opportunity and miss out on money. Just get some silver and hold it and allow the trend to do what it does. Palladium doing very, very nicely as well. There was actually an entry opportunity on Palladium on the 21st of July and continuing to the upside. I do not see an entry opportunity here. We're past the 3-bar window if we're going to be utilizing that. And that's about it. And Platinum actually finally deciding to move up as well along with a Palladium. And I was a little bit more surprised about this one, but again, just all fundamentally valuable things moving up. And this might, again, I know that this week there's going to be a lot of, it seems that they're trying to fear porn us again with the economy and with the Fed and the announcement tomorrow and, recession and this and blah, blah, blah. So this does not bode well potentially for equities markets this week. And while that can, if the equity markets do slip and tumble, which I think is more probable that they do. I won't know for sure until tomorrow. Then that can pull something like Bitcoin down, which is good because then that's your pullback opportunity. But we are seeing a little bit of what I consider early signs that risk off is at least being entered into by some investors and investors that matter. So USD coming up just a week. Looks at the dollar week, right? But coming up a little bit, which is just kind of that early warning sign. So again, paper, gold, physical silver, paper and physical gold and silver hold, and palladium and platinum. Again, you can look for those kind of re-entry opportunities. I think those are going to be they're going to be easier to trade more actively, or are going to represent or present the pullback opportunities. But gold and silver, let's just allow them to trend. Allow them to trend. Don't freak out on every red candle. Unnecessary. You're going to lose out on a lot of money. All right, let's just look at our ETF indices right here real quick. We'll look at the Dow. Dow in a bit of a negative trend, but not confirming a short yet. So really nothing to do here. Just really sitting on the sidelines on the Dow, watching it move sideways. And I don't really actively trade the Dow too much anyways. So not a long opportunity, no continuation opportunities. And what I am waiting for here is for this consolidation to break to take the next positional trade. NASDAQ, still in a bullish trend, pushing to the upside, but I will not be longing the NASDAQ here. Confirmer is dipped into the negative on this system anyways. And just not the area where I would want the NASDAQ to be long in anyways. Again, on the sidelines, waiting for continuation if it does occur. And same for the SPY. SPY slipping down. No continuation opportunities on the SPY. Moving up today. SPX index moving up just a little bit today. Fairly weak. Trying for this continuation as we did slump Thursday and Friday, gapping down a little bit on Friday. So overall, in a very neutral area of the market at relative highs. Statistically, price is likely to climb up. But again, we cannot ignore the fundamentals in the traditional equities markets, and that's what I'll be watching for quite closely this week. But again, no risk on in the markets. No risk on in the markets actively these ways in a way that's going to leave me at risk. So what I mean by that is the only two trades that I have on in the traditional markets are going to be USO. So I am long on oil. I've been long on oil for quite a while, and I think that's a good play to have. And I am long on the S&P 500, but that's because I was long on the S&P 500 from last week. So we've already hit TP1 on that, and stop loss is a break even. There hasn't been an exit sign yet. But what I'm saying here is that the S&P is not signaling an entry now, and it's entered into more neutral territory for me. So risk off for me in traditional markets, except for my established trades that are successful in winning, and I'll just let them run. but not looking for active, aggressive opportunity here. I'm focused on just letting, it's not even being focused on it. I've made these smart decisions, and PTP traders will make the smart decisions when they build the systems. So holding my positions that are running open well, right? So Ethereum, gold, silver, holding on to my Bitcoin. These are all good things that are just going to move up, and I will allow them to continue to move. I'll allow the trend to progress. I won't worry about optimizing the trade or finagling with it or messing with it or tweaking with it. No, just hold what you hold, and let the trade persist. Sit on your hands. Right? Sit on your hands. Good strategy for success. All right. Speaking about sitting on your hands. Speaking of sitting on your hands. Let's see here. Some of the trades that we point out, individuals are going to, not everybody is going to have ubiquitous access to them. Okay. To take a trade, to get into a position, you're going to have access to an exchange that offers that position. So, and as well, individuals are going to want to utilize an exchange. I'm all right. I'm going to make it. Individuals want to utilize an exchange that is not intimidating, certainly, especially if it's their first exchange or their first serious exchange, that offers them as much as they want. Now, I think that, again, I trade on FTX. It's nice, but it's a little overwhelming for new traders. I trade on Binance, but that is the altcoin slot machine. So I think that, again, some of the best consistent profits have been made by a lot of our traders on a simpler exchange, and that one is Bybit. And the reason I like it and the reason I recommend it is because when I recommend people to go there, they tend to make money because they have a limited selection of coins. You've got Bitcoin, you've got Ethereum, you've got EOS, and you've got Ripple. They now have insurance. They're the only exchange that does that. And you've got the USDT marketplace for Bitcoin, which I think the BTC USDT marketplace is the best marketplace to trade on for new traders, because you can hold your trading account in USDT, not BTC, so you never have to worry about the price of BTC slipping. Of course, this is not. You will lose money. You will not make as much money if Bitcoin is in a bullish trend, and then you can get into my personal strategy of hedging and unhedging vis-a-vis the baseline. However, having said that, the last thing that I want individuals doing is trading on a shady exchange, because there are so many out there, and getting a horror story about a recent exploit and how deposits have been affected. No, thank you. I want individuals to sleep easy at night and trade on a reliable exchange that gives them what they need, and then they can, from that reliable base, bridge out to wherever they want to be. So, sorry, I lost my train of thought. Anyways, so if let's just play the video. Let's play the video. Let's go see how Jason's doing over there. And then we're going to get into today's cryptocurrency segment, all right? Can't catch a break over on BitMEX with all the wicks? Try a better alternative at bybit.crackingcryptocurrency.com and rest easy for a change. There we go. All right, we've got today's cryptocurrency segment. Give me 1 minute. Forgot to pull the links up, as can sometimes happen. All right. Sorry about that. Okay, so now today's top story is going to be about DeFi. Of course, let's talk about it. When we're talking about altcoin markets potentially pulling back and the focus going to the majors, Bitcoin, gold, silver, Ethereum, the big dogs, and we're talking about holding those trends, holding those positions, sitting on your hands and letting the trade play out, letting the trend do what it does. But we have to talk about what are the opportunities for DeFi here. And over the past few months, we have seen, of course, a major boom in Ethereum's DeFi sector. And with today's altcoin pullback, we're seeing the majors, because of Bitcoin breaking out and stealing the spotlight again, we have to wonder if DeFi's surge in popularity is a sustainable trend, or is it going the way of ICO mania in 2018? So, taking a look at the latest data that's coming out of the DeFi Pulse, we see that total DeFi users have grown by 23% since the 1st of June. And over $3.5 billion worth of assets are currently locked up in the DeFi ecosystem. We've seen transaction volume across all Ethereum-based DeFi apps climb by nearly 800% since April. And a lot of the success is thanks to that other buzzword you've likely heard a lot in recent weeks, and that's yield farming. Yield farming is where DeFi platforms incentivize users to deposit and stake their funds in order to earn fat dividends. So in many ways, it's led to unintended consequences because crypto users have rushed in to snap up every promising new DeFi token, which some would argue is creating an artificial demand for these assets. But speculators, we like artificial demand. Why not? So the question that we're asking ourselves today is the DeFi craze sustainable? Or will it be the next Ethereum-powered bubble to burst? Because we've seen this before. Now, what DeFi is in many ways, it's a new generation, a new type of financial instrument, which allows for community-owned to have community-owned networks, and those community-owned networks just happen to be permissionless and global in reach and engagement from day one. Now, at this stage of the game, though, DeFi is very, very, very experimental. It looks very attractive on the outside, but if you look under the hood, there are a lot of potential problems. And this experiment of DeFi caters to very hardcore crypto audiences. But in many ways, this is just the start, because if issues get ironed out and awareness of DeFi increases, then this is a system that we would see more mainstream users curious to diversify their crypto holdings begin to enter into the space. So this is the entire idea of decentralizing financial marketplaces, of blending what traditional banks do with the efficiency and kind of robustness of cryptocurrency. Now, when we talk about user experience, because that has been a very, very sore spot for cryptocurrency, the DeFi user interface and overall experience is one of the cleanest we've seen in the industry to date. In many ways, it's better and more engaging than what traditional finance offers. Now, in this article, they quoted the CEO of Trustology, Alex Batlin, and he's talking about one of the primary attractions behind DeFi is having lower fees than traditional finance. And the reason that's possible is because there's no centralized entity that is rent-seeking or middlemanning your Ethereum transactions. It goes on to mention that DeFi was initially too complex for the vast majority of Ethereum users to understand. But now they're getting to the point where it's becoming easy enough for anyone with a MetaMask wallet and some Ethereum sitting around to engage in DeFi and to attempt to farm yield or find some sort of value. And one-click services like InstaDApp are enabling average investors to take advantage of DeFi strategies like flash loans and other dividend-generating tools. So, user interface improving, and the user interface increases the amount of individuals coming in. So, in the early days, while one really had to be something of a specialist, familiar with drafting custom contracts in my Ether wallet, the viability of yield farming is now reaching a much broader demographic thanks to slick front ends and user portals on the web. Now, however, Later in this article, Julian Sawyer, who heads up Gemini's European operations, is a little bit more uncertain of the long-term viability of DeFi products, saying that while the concept of decentralized finance is fundamentally sound, whether or not it's going to be able to unseat mainstream financial products remains to be seen. And again, one thing I'll say about that is you'll see a blend. You'll see a marriage, right? Human societies trend toward the best solution to a problem over time, given enough time, because human beings are pretty awesome. Now, according to Julian, though, removing all central controls, intermediaries, and oversight that are ubiquitous to even the simplest of traditional financial processes. I mean, how many papers do you need to sign to open up a checking account? But that might make DeFi a non-starter among central banks, regulators, major institutions, and even average consumers. So, this is representing a, kind of the old guard argument that for DeFi products to be more than just a plaything of crypto nerds, in order to actually gain mass adoption, the DeFi space needs to develop controls and protections to allow it to interact with or exist in the same world as current financial systems. So we need that centralized control. We need that strong and a kind of overlord to seek rent from us and tell us what to do. But he says that includes implementing effective compliance measures to prevent crime and fraud, such as the ability to address the source, to assess the source of wealth and funds running through applications. And while traditional banking and finance isn't perfect, even according to Sawyer, DeFi won't be able to build the sort of credibility that it needs and the trust that it needs to gain traction without first building bridges to existing institutions and engaging with regulators. And I think that there he does have a point. Now, I think that's a shorter term view. I think that in the longer term view, the decentralized approach does work better, unless we get just the all powerful AI to run it for us. But in the long term, I think that human beings will trend toward what DeFi wants to be now. However, it does, to me, on its face, seem very, very, very true that initially you're not going to see that mass consumer adoption, and again, which will require like central bank agreement, regulators to approve, governments to approve, and they're not going to allow something that's just fully crazy running around in the wild. And I also don't think it's likely that we have this immediate crypto anarchist dream where we just overthrow a government and then everything's beautiful and decentralized. No, unfortunately, a very long-term view on the path from where we are right now as a society to where we will eventually be in the future. Again, if you want to predict the future, it's really easy. All you have to do is sit down and imagine a better world, like logically, and eventually we'll get there, right? For example, if you had gone back 100 years ago and just thought of some practical things that would be good, and you'd be like, man, 100 years ago, how could life be better? Well, it would be awesome if we had more of this kind of electricity thing, right? This is a new thing. See these lights, they're awesome. They replace this burning candle. If we had more of these and they were all over the place, it'd be really cool if we could go faster than the horse consistently. It would be really cool if we had more food production, if we didn't have to work so hard individually for food all the time, so that we could actually specialize in the jobs and become smarter. It'd be really great if we could build cities where we currently can't build them. It'd be really cool if we could travel through space. And guess what? We're there. And so if you want to predict the future, just realize very simple fundamental fact about existence or reality, right? Human society trends toward improving itself over time. This is why I have fundamental faith in humanity. I am not a cynical person. I love my life. I love the existence of human beings. I think we're awesome. And I think that we are going to get where we are. This is why I push back against all these really cynical, negative, horrible conspiracy theories that say that, the world is just going to descend into absolute chaos and pandemic. That's possible. We might, there's going to be terrible things that happen. There's always terrible things that happen. But we figure it out. We establish a better society. And that is just a challenge and barrier for us to get over, right? So again, fundamentally bullish on humanity. But the fact remains, despite the trust and regulation that are present in mainstream finance, many today no longer trust traditional banking to be fair or even transparent, particularly if the economy unravels in the coming months and years after this virus straw breaks the back of the central bank camel. The so-called credibility of the legacy financial system could be in jeopardy, and consumers will be more and more willing to embrace an alternative that's accountable and auditable, just in a different sort of way. So while many of today's fintech companies like PayPal or Square or Robinhood, they're just shiny new interfaces over a previous century banking system. DeFi is based on an entirely different new financial system altogether. And if it lives up to its potential, then decentralized finance could help make finance more accessible, fair, and transparent to consumers everywhere, capable of innovating quicker than traditional finance, along with even greater capital efficiency. I do think that what's more likely, right, is a bridge, right? I do agree with Julian that although I think I disagree with his sentiment, I agree that what is far more likely is seeing traditional finance adopt aspects of decentralized finance, and then as society improves or evolves, seeing more and more and more and more decentralization to where eventually we get to where DeFi. So my kind of view is that DeFi is what we deserve, right? But it's probably not what we're going to get right now. What we're going to get is probably what we need, which is a better banking structure, right? Have no doubt, right? This is my firm belief on this. It is very, very popular right now to think that we are in the depths of some, ancient, diabolical, malevolent plan. And that it's never going to get better, right? That it's just going to be this constant like slave master system, and then the central bank's just going to rule everything. There didn't used to be central banks, right? The central banking model is an improvement on what we used to have, okay? And it is. The central banking model is an improvement on the financial system that we used to have. But it's not perfect. It's not great. There's a lot that's wrong with it. So what is cryptocurrency? What does Bitcoin represent? What does decentralized currency represent? It represents the next evolution. It represents something better to replace the central banking model. It's just not going to be a cut and paste, right? It's going to be a little bit of a blending, a little bit of a blending, a little bit of a blending until we blend almost all the way over to the other side. And then eventually we're going to have to find something that's better than Bitcoin, right? It's not going to get us to the finish line. And by finish line, I mean, Alpha Centauri and traveling around in space. Maybe, well, who knows? We'll figure it out. Now, further on in this article, they quoted the co-founder of venture capital firm Framework Ventures, and that's Vance Spencer. And he happens to agree with these sentiments as well. Now, DeFi allows for wider global access to financial services, affordable cross-border payments through the reduction in costly intermediaries, improved privacy and security, more transparent lines of credit, and an increased control over one's assets, which is very, very important. Unconfiscatability is extremely important. Now, Spencer goes on to say that a lot of projects in DeFi are still undergoing the process of decentralization, but even in their embryonic state, their user experience in terms of permissionlessness is already on another level compared to anything traditional finance offers. And if we compare DeFi tokens to the products available during the ICO craze, saying that DeFi projects are infinitely more useful than the useless projects that emerged in 2017 and 2018 is readily apparent, because DeFi products out of the gate are doing things right now and have a user base, right? Whereas most ICO didn't even produce a white paper. Now, certain DeFi projects have what he calls value extractive mechanisms, right? Either through dividends or burning functions, meaning their value can actually be modeled. A sharp departure from previous eras of token sales, where the only valuation model we had was, pick a number. That's how high it could get, right? To search for tangible utility or function. And, more importantly, he says, consumers can immediately see the advantage that the DeFi products provide, and that they mimic products that individuals already use in their everyday to-day lives, but in a way that is more transparent, efficient, and democratic. One challenge facing decentralized finance is to articulate the exact real-world problems, though, that they're aiming to solve. Because, crypto tends to have this sales pitch that we're bucking the legacy system, right? That's only going to go so far in attracting a minority of those who dissent to how traditional banking is currently done. You catch more flies with honey than with vinegar. This is why it's typically, when you look at like revolutionaries throughout history, they're typically the outcasts of society. They were outcasts before they became revolutionaries, and they're revolutionaries part and parcel because they are outcasts from society. And whereas if you look at, and generally, revolutionaries don't tend to revolutionize. Like, there's generally not revolution. But if you do look at the things that do change society, it is typically what you wouldn't think. It is typically individuals who are what's the term I'm looking for? It's individuals who are able to speak eloquently and passionately with a positive message and a path forward to make the world a better place, right? They identify a problem, they develop a solution to the problem, and then they convince the broader world to accept that solution. And sometimes that dissemination takes a long time. The adoption takes a long time. They express to the world how this solution to the problem makes their lives better, and they demonstrate how this solution to the problem makes their lives better through example. And that is the way that real change happens. I think that's the way that the most fundamental changes in society have happened over the last 10,000 years. So, and generally not through, and almost never through actual violent revolution. So bucking the system is a good narrative, and it is certainly important and incumbent upon us to call out the inefficiencies in the system, but we need to improve, right? Concepts need to be layered on top, and then eventually you can cut out the concepts that you didn't like, but you have to have something there in place that works to replace them, or you're just going to let people fall into a black hole, and that's anarchy and chaos, and that doesn't work so well, right? So instead, DeFi will have to demonstrate that, in fact, it does have viable use cases where it provides better, more efficient, and faster services to its consumers, right? Going back to Sawyer, explaining that the industry as a whole needs to really focus on developing and communicating the values that these applications in DeFi can bring to consumers and businesses right now. Now, in the meantime, again, I'm hopeful this is going to happen. Again, like I said, DeFi is the system that we deserve. It's probably not the system we're going to get in its current implementation for mainstream adoption, but we'll get there. And in the meantime, we should not underestimate the challenges that DeFi faces in the near term or get carried away with the recent surge in total value locked in the DeFi ecosystem or the valuations that have been put on these speculative assets. So many of us can picture a future in which banking services do move away from brick and mortar financial institutions to purely fintech products delivered directly to the palm of your hand with the use of smartphone technology and mobile applications, or the cell implanted in your forehead. But DeFi itself is still largely an experiment and remains far, far away from mass adoption. And as with crypto in general, right, there will be ups, big ups, and there will be downs, big downs. And many have observed that during the course of 2019 and early 2020. Many high-profile exploits have taken place on these platforms. Nonetheless, those currently pouring into the DeFi space and snatching up tokens left and right firmly believe the underlying breakthrough in technology, business models, and banking governance will see DeFi add serious value to people in the long term. And for venture capitalists like Spencer, it's obvious that some of these DeFi projects will fail, but to start labeling this growing industry as a bubble is too premature. So the total market capitalization of all DeFi protocols is just a few $1 billion today. That is a mere fraction of the larger cryptocurrency industry and nearly insignificant compared to the mainstream financial sector. A flight to quality will eventually happen when the showdown between modern fintech innovation and traditional banking finally goes down. And if we are indeed headed into the next great crypto cycle in the market, the next 4 to 10 years, we'll see another major influx of new adopters. And those users will become quickly acquainted with the DeFi space. So it's safe to say, even without mass adoption or toppling the existing savings and loan racket of legacy finance, today's quality DeFi protocols will be embraced by a wave of new users who will quickly grasp what these projects offer as they do reflect the financial services currently available in traditional finance. Now, while many 2017, 2018 ICO tokens were far too ambitious or ahead of their time, or scammy, promising a crypto economy where many existing businesses and services would be tokenized, it in many ways was too abstract. It was just too full of friction to be successful. DeFi, on the other hand, is not really painting this hypothetical future. It's reinventing financial systems that many users intuitively recognize can benefit from permissionlessness, transparency, audibility. And in this regard, we can remain pretty confident that DeFi will have greater staying power than the previous era's Ethereum, hype craze use case. And while there are many technical challenges, network congestion, high fees due to Ethereum shortcomings, hopefully the rollout of Ethereum 2.0 is coming in the years ahead. And this could very well coincide with DeFi's formative years as it tries to take its place in the financial world and as that kind of dream crystallizes. So ultimately, something to watch. Now, what do you guys think, right? Is DeFi going to remain a niche playground for cryptocurrency enthusiasts? Or do you see a future where these DeFi protocols will quickly and easily be able to deliver traditional banking services like savings and loans directly to the average consumers via the convenience of mobile apps? Right? Will they begin to steal clients away from traditional banking in the world's developed economies? Or will they take the developing world by storm, where such banking services are not yet widely available yet at all? Can you see the innovation on the edges? Let us know how you feel about the future of DeFi, gimmick and flash in the pan trend, or the future of commercial banking. Leave your comments down below. Thank you for joining me for today's cryptocurrency segment. Let's get back to the charts. Actually, let's not get back to the charts. Let's get to the Q&A segment. Okay, here we go. All right, I got first thing here is I see is a super chat. Steven, I'm gonna try this. Hopefully I don't pronounce it right. Simonovic says, thank you so much for the $5, my friend, by the way. Thank you for watching the show. He says, what are your thoughts on Raven Protocol? Deep learning, AI tech, awesome article from MIT describing it too, micro market cap, Binance DEX. So this is not going to be RVN. So I like RVN. It's a good coin to mine. I do not know anything about RAVEN. I've never heard of it. So I would have to look into it, my friend. I'm not going to give any recommendations on something that I'm just fundamentally unfamiliar with. I will say, I mean, you used buzzwords there. So, deep learning, artificial intelligence, MIT, micro market cap. So if it's, what I will say is this, if we're not gonna have any probably reliable TA because when we're looking at something that's going to explode or have any positive valuation in the future, you do have to use fundamental analysis. What I will say is that, as an investor, you're going to have to do the best possible research that you can, identify the problem that needs to be solved, how the project is going to solve it, and how that is going to make money. And if you can do those three things and you can answer those three things to yourself and you understand every step of that process, you understand the problem, you really get it, you really do think it's a problem, you understand how they intend to solve it, and you think that that is a viable solution, and you see how that will either save or make money. And you truly believe that. You don't have to be right, you won't know, but you have to believe. That is something that you can invest in, right? This is how I pick my investments. I invest in things that I fundamentally understand, solve problems, and will make the world a better place. And if you do that, you have good odds to be a successful investor, because that means you'll have the conviction to hold a position despite FUD or despite the chart or despite whatever's going on, right? So some of my best investments have been in things that have had massive up and downs, but I stuck to my guns because I believed in what I bought. I believed in what they were doing, and they're doing it. So what I will say is that with something that's a micro market cap, you do not need a large position, because while the upside might be great, the downside, your downside is limited to as much as you put in, right? Whereas your upside is potentially unlimited. So invest reasonably, invest responsibly. You do not need a large position in something that's a micro market cap to have an asymmetric return. And thank you so much for the $5, my friend. Thank you so much for watching the show. All right, let's scroll up a little bit. Jordan Stott's coming in just to leave the like. Thank you so much, my friend. Let's see here. Jake Rezio and Texas Blue just wanted to comment on the LTC USD trade. So in general, right? I think that Bitcoin is likely to outperform altcoins moving forward. Now, when we look at Litecoin to the dollar is going to go up if Bitcoin goes up. The question is, how much is it going to go up? Is it going to go up more percentages than Bitcoin? If it does, then you're going to see the alt Bitcoin chart go up, which is why looking at the alt Bitcoin chart, the Litecoin Bitcoin chart, is important. Because if the Litecoin Bitcoin chart is not going to go up, then it's more profitable to hold Bitcoin than Litecoin. You're going to make more money. So while Litecoin, I didn't look at the dollar chart, but while it might be breaking out, while it might even be generating a trade signal, and that could be a trade that you take, what I'm saying is, if you're looking to exchange Bitcoin for it, you will probably make more money holding the Bitcoin if Bitcoin does what it's going to do. Now, if you have USD sitting on Kraken and you want to take LTC USD as a trade, that's fine. That's money that you don't have in Bitcoin, so that those dollars are just sitting there, and Litecoin USD might be a valid trade, particularly if you already have exposure to BTC USD. So one way to hedge risk, but again, LTC USD is going to move in the exact same direction as BTC USD. So if BTC USD is trending upwards, LTC USD will trend upwards. If BTC USD is trending downwards, LTC USD will trend downwards. They're not going to significantly be negatively correlated. Let's see here. Father of Shalom says, what's my price prediction for Bitcoin and Ethereum in 2020? So I don't know if we hit Bitcoin or Ethereum in 2020. Price predictions are generally silly, but 20,000. I think that we are going to hit $20,000 at least on this next BTC rally. If we do hit 20,000 and hold above it, then there's no reason that we cannot have another parabolic movement, right? So the power law corridor would put us at about $65,000. So I think that's entirely possible. Dare Student says, thanks for the content. Can you give us some tips on good public exit indicators? Thanks. Yeah, there's really good ones out there. I would recommend, so what I would recommend is just going through, the process is laid out in the course, but just go through the TradingView public library and start with the most popular indicators and find ones that attempt to call market tops and bottoms and test them, right? And see how often they're right and how much run up you get when you're testing your trades. So you test it against your trading system. This is why your exit has to come last. You test it against your trades and see what the different percentages is of run up and drawdown that you get, and you take the one that tests the best, that performs the best. Let's see here. Zen Amster says, is it wise to sell Ethereum now to buy Bitcoin? I think if you don't have any Bitcoin, that makes sense. But I don't have a strong opinion on this, but Alex thinks that Ethereum is going to outperform Bitcoin here. So I would have exposure to both. I don't necessarily think that selling Ethereum to buy Bitcoin here is going to make you more money. It could. It just depends on which outperforms the other. I think Bitcoin is likely to outperform in the short term, but I think given enough time, I think they'll both. I think that Ethereum will actually, percentage-wise, let's see here. In the short term, Ethereum will likely, percentage-wise, outperform Bitcoin because it has more room to move. But I think that Bitcoin will move much farther than Ethereum in the long run. So, depending on your time preference, maybe. That's not a very clear answer. I'm just saying, like, if you want to make money like right now, it doesn't matter, I think, which one you hold. You're taking a chance either way. In the midterm, I think that Ethereum will make you more money. In the long term, Bitcoin will make you far much more money. So, but you have lots of pullbacks and time and opportunity. So you can wait. You can wait for a entry opportunity, right? Now might be the right time to take some profit on Ethereum, for example, on a trade. I wouldn't sell Ethereum for an investment or a positional trade. And now is a fairly aggressive time. I think that waiting for a pullback and a good entry opportunity, or whenever your system tells you to buy Bitcoin, is the right time to buy Bitcoin. Not when there's a big green candle. Any thoughts on Compound? I like it. Not the right time to buy. Any thoughts on Chainlink? Listen, I don't want to say this on Chainlink because I don't want to trade against the trend. Chainlink has not. Let me actually just double check so I don't say something stupid. All right, so Chainlink came down here to this red box territory. I had identified kind of as the area where I didn't want to be in the trade anymore. Didn't close below it. I had a nice bounce off of this area. So we actually traded this. We did buy Chainlink on the short term coming down to this area and then sold at 775. And then price did come down, hit the break-even stop loss. So we did make some good money on that trade. Price is doing it again. Somewhat of a double bottom, but really a liquidity raid, liquidity tap. Let's go to the daily here. I don't think we've actually broken down. Yeah. So Litecoin has not, or excuse me, Chainlink has not broken its trend yet. So we need to be about below $6, which would actually, in my opinion, be an attractive area to buy up Chainlink. So Chainlink to USD is a buy still. It's moving. It's overall consolidating. I know it's kind of trending to the downside, but it's establishing a range. It can break to the downside, but I'm not going to be on the a quick to short link. I know that we've got the Chainlink fraud exposed thing that came out with Zion Ventures. And while I largely think that a lot that's in there is objectively true, I'm not exactly confident that it's going to have the effect that people think that it's going to have on price. So a lot of individuals are invested in Chainlink. There's a ton of interest in Chainlink, and the market can remain irrational longer than you can remain solvent. So if you want to short Chainlink, wait until it's under $6, and you'll start to see that thing free fall. Other than that, I would trade the range right now until you get a trending signal to the upside, which is likely going to take some time. So range bound behavior, Bollinger Bands, RSI or whatever, just reversal strategy, reversion of the mean, buy low, sell high, short high, cover low until we get a break of this, until we get a break. T-Dub says, is one gold legit? Probably not. Do I see XRP going to the moon by October? No. Yep, Mbate, you make a good point here. He says you're referring to exit indicators, and he says, be careful. Some indicators repaint the bars after the fact so they look more accurate than they really are. Yes, you will see this. I will say, if you look through the comment section on indicators on TradingView, you're typically going to find this, especially if one like works really, really well and it's popular and it repaints, then people know. It'll be in the comment section. The other thing is that's what forward testing is for. Like, so when you're live trading something, you start live trading with small capital and you'll like quickly figure out like, oh, this thing does not signal when it said it signaled in back testing. And so you'll know to go back and replace it. Save yourself a lot of trouble. But very good point. Thanks for pointing that out, my friend. Let's see here. Luke Wolfgang says the Bitcoin Litecoin chart is showing a long-term trend reversal and should close the gap on Bitcoin, ultimately outpacing as a midterm hold idea, similar to silver closing the gap on gold. Thoughts? Yeah, so I talked a lot about Litecoin earlier, the Litecoin Bitcoin chart, and I believe. Well, so I disagree that it's showing a long-term trend reversal. I think that it's in an accumulation zone on the weekly chart. So for positional trading, Litecoin is certainly in an area where dollar cost averaging sounds attractive. Now that's something that you might have to hold for months or years. That's a positional trade. It's a long-term trade. As far as swing trading it, I don't see anything that would incentivize me to trade it, which means, on the basis of weeks or months. So I do not see that trend reversal yet. I do see it. I see Litecoin low, and Litecoin has been underperforming, whereas Bitcoin and Ethereum are breaking out after being in a pronounced uptrend. Litecoin and XRP have been terrible performers. So again, one common bias to live by is to be long what's strong and to be short what's weak. Because expecting that this coin is going to catch up because it's been underperforming that's not a thing. It's not real. It happens once in a while, but it's not statistically accurate over the broader market and over a broader period of time. So again, I like Litecoin. So positionally, so dollar cost averaging to it at the lows is an attractive strategy to me. Buying it on the basis of what the chart is signaling, not necessarily. All right, guys, it is 2 o'clock. It's time to hit the door. All right, thank you guys so much for joining me for another exciting episode of Breaking Bitcoin Market Update with your host, Justin Wise. Hopefully you guys enjoyed the show. I really appreciate the live chat engagement. I appreciate the questions. I'm sorry if I didn't get to everything. I will attempt to address it maybe in the next opening or tomorrow in tomorrow's show. We will be back at 12 p.m. Central Standard Time tomorrow for another episode of Breaking Bitcoin. Make sure to join the Discord, discord.crackingcryptocurrency.com. And if you're interested in building your own objective trading strategy, our premium signal service, our indicator suite, or anything else that we offer, make sure to visit the website at premium.crackingcryptocurrency.com to learn more. Upcoming events. The community mentoring session on Wednesday, of course, for our premium subscribers, and the premium onboarding module, which will be coming out later on this week to replace what is currently on the Google Drive. If you guys enjoyed the content, please make sure to support the show, subscribe to this channel on YouTube, and smash a like on today's video. It helps us out more than you know, and it only takes you guys a few seconds. So I appreciate the support. We now have members. So if you guys would like to showcase your support, get some cool emojis, some avatars over here on YouTube, you can become a member as well and support the show continually moving forward like that. Discord. Website. Let's see here. Yeah, that's about it. We're going to be posting. We got a lot to do in the premium group today, so I'll be with the analysts here for the next 4 or 5 hours. So give you guys a good day. Thank you so much for watching the show. If you have any questions, leave them in the comment section down below. We will pick a random commenter once a month to get a free month of access to the premium trading group. So that's a way for you guys to get into that and give it an opportunity if you haven't yet tried it out. And, overall, listen, guys, very exciting movements out of the market today. Do not trade inappropriately, right? Stick to the system, trade your system, look for your setups, maximize your setups, and do not look for setups that are not in your wheelhouse, right? You're likely not there yet. If you're looking for setups that aren't your setups, that means you haven't developed a system to catch those setups yet. And what you need to do is develop a strategy to catch those setups. Otherwise, you can get lucky, but you won't be good. And you need to be good to be consistent. So remember, at the end of the day, it is risk management and position sizing and discipline and strategy that pay the bills. And will never be any different, right? You guys have a fantastic day. Thank you guys so much for joining me. And I'll see you tomorrow. Cheers.